Hello everyone. Today we will learn about meaning and definition of accounting. So in the previous video we had learned about the difference between bookkeeping, accounting and accountancy. Now we will learn in detail about accountancy. So bookkeeping is part of accounting. Let me tell you all, this all I explained in the previous video. This is just a revision. So bookkeeping is a part of accounting. It's a primary stage in accounting. Primary stage means it's the first step in accounting. Okay. In this step, we record all the business transactions which include money or money's worth. Then second step is accounting. This is when we classify, summarize, analyze and interpret financial data. So we don't only record the transactions, we also interpret them, we analyze them, we classify them, and then we prepare a report of the transactions, and then we submit it to the officials. Then the third step was accountancy. Now let us study this in detail. So it's a broader field. So accountancy is the main branch. It includes bookkeeping and accounting. Okay. So without accountancy, you cannot reach at the point where bookkeeping is there and accounting is there. Okay. Accountancy is the main branch. It includes both bookkeeping and accounting. It focuses on recording, classifying, reporting transactions. Bookkeeping was what? It was only recording. Accounting was what? It was classifying, interpreting, analyzing everything. This includes both recording also and classifying also. So both the processes of bookkeeping and accounting. Recording, classifying, reporting the business transactions. Why is it done? It is done to provide information to business owners, investors and stakeholders. As I've said, stakeholders are those people who are connected with the business or the organization. So in case of a business, who are the stakeholders? The owner, that is the proprietor of the business, the creditors, the debtors, the customers of the business, the investors who have invested in the business, the employees, the partners if there are any partners. So all those people will be the stakeholders. All these people will receive information due to the accountancy. Okay, even the government will be one of the stakeholders, because whenever you find out the income, you have to pay some part of that income to the government, which is known as tax. So government is also a stakeholder of the business. Examples of accountancy are studying financial management, auditing, taxation. So studying financial management, so whatever transactions you have done, you have to study that. So how much expenses you made, how much income you received, all that. Okay. So if you study and you realize that your expenses are very much and your income is very less, then you have to make some changes to your business activities and then reduce your expenses and increase your incomes. Okay, so that you earn more profit. Then auditing is done because we are humans, so we make mistakes and this needs to be rectified. Okay, so auditing is one of the branches that helps you in rectifying your mistakes. It allows you to recognize where you have made mistakes. It allows you to rectify your mistakes, even if like you are honest, but the people who are working under you, if they are dishonest, they commit any frauds and then corruption happens and all, then auditing is helpful in detecting the frauds as well. And third one is taxation. As I said, government is one of the stakeholders. So accountancy helps you in taxation processes also. It helps you to know how much income you have made, how much taxes you can incur. Okay, so the tax slab and all, everything which comes under taxation. Accountancy also includes all the principles which we will learn now. Accounting principles are the universal rules followed in accounting. So these rules are not only limited to India, not only limited to Maharashtra. It is all over the world. The same rules are followed all over the world. So even if you are in India and you record some transaction as a debit to this account, credit to that account. So even if you go in USA or in any other country, there also the same account will be debited and the same account will be credited in case of the same transaction. Okay, so there will be no differences. Then it ensures accuracy, reliability and consistency in financial records. Now why accounting principles are important? Because it helps you to maintain accuracy. Your correctness of the accounts are ensured. Your reliability. Reliability is what it is when all the transactions are consistent in nature. Like if you receive money, then that account will be debited. Debit the receiver, right? So the receiver will be debited. In another case, the same type of transaction where you receive money, there also it is debited. Then it will be known as reliable, that your accounts are reliable because these are consistent. Here it is debited and the same account is credited here. In case of same transaction, then it is unreliable. And then it is consistent, as I said, it should be recorded every time you come across a transaction, you receive money, you pay money, you purchase, you sell, whatever, and you have to record it. So it helps you to stay consistent with your recording of transactions, analyzing it and preparing a report on that. The examples of accounting principles are, one of the principles is going concern. So what is going concern? In this principle, you assume that your business is going to run forever and then you are maintaining your books of accounts. Okay? So that only I have written here. The principle of going concern assumes that the business will continue operating in the future. So you are not going to assume that your business will close down this year. Okay, if you assume that, then you will not record your books of accounts. Okay, so you have to assume that your business will keep running in the future. Now, in the previous video I had said that meaning you can write in your own words. But in the exam, you have to write definition also, which definition you have to write in exact words along with the name of the person who has given the definition. Okay. So, in case of accountancy also, there is one person who has given the definition. His name is Kohler. Okay. So, he has said accountancy refers to the entire body and the theory and process of accounting. Okay. So, it is the entire body. As I have said, without accountancy, you cannot proceed to bookkeeping and accounting. So, accountancy is the entire body. Without the body, you cannot operate. Okay, like if you don't have hands, you don't have legs, you cannot go anywhere, you cannot work. Okay, so like that, it is accountancy is also your hands and your legs. It's your brain basically. So it is a body of theory and process of accounting. So not only theory, your practicality is also important. Both are included in accountancy. So theory is what we are learning now. Practical sums will learn later on. Okay. First you need to learn the theory, what it is, why is it done, how is it done, everything. And then in practical, you know how exactly you should do it. Okay. In theory you don't get much idea indeed, but at least you get an overview of that concept. In practicality you understand in-depth knowledge. So I hope this video is very helpful for you all, and if you like my video, please like, share and subscribe. Thank you.